Good evening, everybody. All right. Oh, so we're watching this market that the Dow is getting a little bit dicey up here. It hasn't sold off, still above the T line, but not showing a heck of a lot of strength. And the NASDAQ, because of the Amazon, Google, and Microsoft last week, just popped back up, back into this trajectory. So, um, yeah, no, the Steelers will be at the Super Bowl. We'll have fun this year. Um, so there's nothing here yet telling us that there's going to be any real selling at this point. So the markets are still iffy, not iffy, but just a slow uptrend, which means you have to concentrate on which individual charts are working well. Now we know crude oil is finally broken out. Let me see if I can make this a little bit smaller. The fact that it broke out through kind of this level told us that this uptrend. I'm surprised that crude oil is this high. I just thought there was, but this is why you never try to figure out what yourself, because we're not analysts. We're just watching with candlestick charts what everybody else is interpreting, and then what they're actually doing with their decisions. Gold starting to bounce up off the 200. Got some lean hogs. Been staying with it because it's never closed back below the T line. And right now, we've pulled back on wheat. We're still short wheat. We're watching to see whether it can get through this level. If it starts trading positive from here, you can see this is a support level. If it breaks down, we can see that it's now still in this downtrend. And what else? Oh, the dollar. Dollar pulling back a little bit, but still above the T line. Something to trade more term. Okay, so before I forget, we've done a weather check. Next weekend it's supposed to be cold and rainy most everywhere. So we're doing the 2-day training session. I get a lot of questions during the day of why this is what we get out of the 2-day training. The two-day training is kind of the bread and butter training of all of them. We do all the signals, the 12 major signals, the patterns, but more importantly, we put everything in order. So you're seeing why signals and patterns work, and then effective entry and exit strategies, stop losses, how to do trend analysis to know whether you're supposed to be mostly long or short. What you are essentially doing based upon the candlestick signals and patterns is taking all the common sense perspectives that the Japanese rice traders have illustrated with candlestick signals and patterns and getting them all in a chronological order so it becomes understandable. The biggest feedback comment that I get after these two-day training is that the light finally went on, that what people were seeing bits and pieces of before and trying to analyze on just individual aspects, that once they saw everything put together, now they're analyzing the whole concept of candlesticks, or utilizing the whole concept of candlesticks, and it makes it a heck of a lot easier to understand when to be in, when to be out, and what you should be analyzing, not on a maybe a signal by signal basis, but on a trend analysis with the signals being the confirmation. So things like ADMS, when we start seeing the Morningstar signal and then the stick sandwich signal, that puts you in situations where the probabilities of being in the right place at the right time is extremely high. Square is another one where we could see what was happening. I mean, this is just logic, visual common sense. But if we can see there's a lot of indecision on our T-line, that when they came out of it, we knew what the next phase was, that we're now in an uptrend. Or something like Vary, which looked like it had the prospects, but when it came back down and trading flat, what's this telling you? Logically, this should be saying, all right, and I say logically, prior to understanding what the whole chart looked like, now if I had been buying this thinking, oh man, this is going to work out good, oh boy, it's not ready yet, it's not ready yet, instead of saying, hey, this is not working, move on to something else. You can always come back to it when you see the next buy signal. I would get caught in things like this and saying, all right, it started to work. I hate to sell it out because what if it turns right around as soon as I sell it and goes up? Well, now we're trying to fight our emotions versus fighting or utilizing the analysis of what's actually happening in the chart, which right now the chart is telling us nothing is happening. Jim, actually, the T-line was one of my first private training students. Rick Sadler came up with it. And this is the benefit of candlestick analysis, is we can put things on our charts that the Japanese rice traders didn't have available to them, obviously, without computers. When I first started learning candlesticks, the first books I read were not immediately going into the signals and patterns. They were telling you how to make a box, and you put a piece of glass over the top of it, and you put a candle underneath it, and then you use a thin rice paper to draw your figures or your formations. So that's how, I want to say, antiquated the process was. And that was well before we started seeing candlestick charts on the internet. So, Jim, I'm sorry, the answer is the T-line was something that was brought up, and that if you have somebody say, hey, you should put this indicator or that indicator on your chart, the main advantage we have with candlestick charts is we know they work. Now what we're trying to do is refine them with other indicators that the Japanese rice traders may not have had, and the T-line was one of them. And again, the T-line has very simple rules. As long as you're above the T-line, you can stay long, and the further away you move from the T-line, the higher the probability it's going to come back and test it. So that is something that you can add to your chart analysis that's going to improve the probabilities of being in the right positions at the right time, or staying in the right position. So if you've got something like this, which had the nice slow curve breakout but came back to the T-line, now the analysis is, all right, we're still above the T-line, but our stochastics are starting to roll over a little bit. We're not getting very much positive traction on this one. Close it and move on to something that gives you a much higher probability. So part of, or not part, but the major part of candlestick analysis is the graphics can tell us what to be doing. Here is our evening star signal in MRTX. Now we've gotten down so we're closer to the oversold condition. Excuse me. With a bullish Harami, which we understand what the bullish Harami tells us, that the selling has stopped, and the saw a little bit of buying today. So what's this tell us as far as overall analysis? Well, we're getting in the oversold area. Bullish Harami. Starting to see some buying. Is this a good high probability downtrend, or is this where support's coming in? This is where support's coming in. Go back and close out the position, because with 10,000 trading entities out there every day, very simple scans are going to be able to find best bullish and bearish signals. Why stay in something that's showing a little bit of iffiness? Close out your short position and move on to something that has a better prospect to it. And you also want to know when to get back out of a trade. Now here's Sit2, which the inverted hammer, fry pan bottom, breakout, did kind of a bearish belt hold, dark cloud type signal. So we know what to do with this. To stay long, we know our criteria is it has to open positive and trade positive. If it opens lower, what's this telling us? The sellers have taken control, you close out the position. So we're using candlestick analysis to show us where the high probability buys are and when to get out of trades. Also when to get back into trades and when to get back out. If you follow, and this is the reason I am so adamant about learning candlestick signals, is because they are the graphic depiction of human nature working the same way time after time. They work a high degree of, what do I say, a high percentage of the time. So I got finally to the point that I started making my good money by saying, don't fight what the charts are telling you. If you're seeing buy signals, there's points where if you were short, like in Labu, and saw a doji in the oversold condition, the Japanese rice traders, that's our number one signal, the doji. If we're in the oversold area, where should it not be trading? Number one, if it opens positive, you probably start covering. Number two, if it came back up through the high of that doji, that told you should have been out of that position completely. Why? Because that's the probabilities. That's what the Japanese rice traders have demonstrated to us for over the last 400 years. BABA, there's your Morningstar signal. Same scenario. If you'd been short and saw a doji, as soon as it opened positive, that was an indication, especially with the stochastics in the oversold area, to cover your trade. A lot of people say, well, shoot, we lose a lot of profitability. Remember, we're not trying to sell at the absolute top and buy at the absolute bottom. We're trying to catch the fat part in between here with a high degree of probability. If you keep making correct trades, even though you're not getting the whole trade, but the more you keep getting a high correct trade ratio, the bigger your compounding effect will be for your account. What was that? That was BABA. NVIDIA, we can see, had a little recognizable pattern, kind of a little scoop pattern. But more importantly, we had the bullish Harami telling us to sell in its stop, followed by a gap up, kind of a doji Harami best friend gap up. Where's our next likely target? Where everybody else is watching in this uptrend. Netflix, still in a kind of a fry pan bottom trend channel. Where's the next likely target? Looking for it to move up into this area. So because of the visuals, we have a much better clarity as far as what's going on at specific levels. Tesla, when it had the little kicker type signal to the downside, failure at the 50, where was the next likely target? The 200-day moving average. Is it going to hold here at the 200? Well, we've got the stochastics in the oversold area, and we're starting to see indecisive dojis down here. That gives us a warning that if we're short, any signs of buying at this point, we want to start covering our short position. So, Amazon, obviously, on that big breakout, tells us that we've probably got a 45 degree in progress. Somebody asked today whether it was could he still buy Amazon. If you do, you've got to anticipate that it's in a 45 degree, and you don't want to see anything that would break that trajectory. So if I was buying Amazon tomorrow in positive trading, I definitely wouldn't want to see it come back and trade back below today's low. Apple, we saw what type of pattern that was setting up. There's your kind of your J-hook pattern with your best friend breakout. Now, whether you're trading these or just watching them, if you're watching them, it should be on the basis that as long as those biggies are trading relatively strong, that means investor confidence is still in this market, because that's where a lot of the money is not only trading, but where everybody's watching to see what the nature of the market is. And if those Apple, Amazon, NVIDIA, all those biggies are trading positive, it means investors' confidence is still there. What is the difference in the time frames between a J-hook and a fry pan bottom? A fry pan bottom is usually we'll get to some usually a big slow curve at the bottom, whereas a J-hook pattern has the prerequisite of a strong uptrend and then a pullback and then coming back up. I'll try to point those out as we see some here, Doug. Nugget, not anything real strong as a reversal. It's just kind of telling us that the gold stocks might be hitting a low end, and we did Tesla. Why did I write it down twice? Okay, so let's take a look at a few of why they are moving and or what was a signal that told you they were going to start to move. This is XNet. XNet, there's kind of your fry pan bottom. And what was the obvious buying point in here? Well, when it held at the 50, it did a left-right combo, which a left-right combo is one of your strongest bullish indicators, then gapped up to this level. I told you there was a different dynamic. Now, how big is that dynamic going to be? We don't know if it's going to be up to here, or here, or here, or up here somewhere. All we can do right now, if you're long this one, is you stay long until you see a confirmed sell signal. So the point of this is we're buying things like this because that has two benefits for us as investors. One, it's telling us that this breakout tells us we've got a high probability that we could have a good strong move. Now, are they all going to more than double? Definitely not. I'm looking for the ones that are going to make at least 10% and hopefully more. And the reason that we identify which breakout or which strong signals are occurring is if we're buying right here, what's our risk reward? Well, we're hoping we got a strong upside. If we're buying right here and it closes back here, we're back out with a small loss and we move on to something else. And the reason I mention this is because quite often I get people asking when I do the sessions for a new group, they will say, how many days does it take you to confirm that your reversal has occurred? Because a lot of times in most technical analysis, it might be 2, 3, 5 trading days or 2, 3, 5, 10%, whatever factors they use. With candlesticks, if we see a bullish signal and it opens positive, that's our confirmation. That's telling us that there's the change of investor sentiment. We don't have to wait 2, 3, 5 days. The other people that are buying after 2, 3, 5, 7 days, they're just adding to our profitability. ALDR. So where do you put abilities in your favor? There's our inverted hammer, doji, gap up. There's our doji just above the T line. So what does this account for? Whoops, he said gagging. What's this give us an opportunity to look for? Well, if they open this positive, what do we have? We have a doji sandwich confirming our kind of our best friend signal off the 50, telling us wave 1, wave 2, wave 3 is going to be the same magnitude as this move right here. So right now, visually, we can be prepared for getting into positions quickly with a low risk that if it doesn't work, we're right back out with a very small loss. If it does work with the probabilities of that pattern, we've got big upside potential. LSCC, another one. You can see the slow curve. If it opens positive tomorrow, this little breakout is telling us that the profit taking of today is over. We've still got the prospect of going to the up to the 200. Now, as far as going through our entry and exit strategies, what do we need to do to tell us that this is going to move positive? We need to see it open positive tomorrow. If it opens lower and starts trading down, now what does this become? It becomes our shooting star signal, and it kept us, if it opened lower, it kept us out of getting into a bad trade. Hertz, same scenario. The Stochastic's coming up. If it opens positive, wave 1, wave 2, doji, 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 hammer, bullish confirmation going into wave 3. And Juno, same scenario. We're right here at the breakout level with a bullish candle, a doji. If they open it positive, what type of signal? Doji sandwich, breakout through this level, giving us a high probability that we're going higher. So knowing what signals to look for and where to look for them kind of tells us where the breakouts are. This is Cypress with the best friend gap up through the resistance level. That tells us wave 1, wave 2, wave 3 starting with a best friend gap up. Shopify pattern here. There's our bobble pattern. Failed at the 50, pulled back to the T-line, came back up through the 50. If it trades positive, what do you got going? Well, if you took out the 50, basically you've got a J-hook pattern, which says wave 1 and wave 3 is probably going to be bringing you back up into this area. Now, is that a big percentage move? Not huge, but if you're playing options, if it moved from here to here and you did the right strategy, whether it's a spread or outright calls, you might be picking up 20, 30, 50, 100% on your trade. Who's handwriting? Well, I'll be a son of a gun. Observe the obvious. There was your uptrend. There was your sell signal. There's your buy signal. And where did it occur? Right smack dab on the 50. Where do you think your next target's going to be? Back up to the 200. Just a high probability trade setup. So these are the type of things that we want to get instilled into everybody's mind. And that's why we want to definitely have everybody aware of which signals are the strongest, such as a kicker signal. Kicker signal bouncing off the 50, breaking out, that tells us we've got a strong uptrend. Once we know the signals, now we're putting ourselves into situations where not only, this one was more of a doji today, but again, notice where this opened and closed on Friday and then gapped up above the open today. If this opens positive, we've got kind of that bullish flutter kicker signal. Now we also have bearish flutter kicker signals. This is where common sense analysis makes it very effective for getting out of positions immediately when it's time to get out. We're in an uptrend. We're almost in the overbought area. Open here and close here. The next day they gap down below this. Up here, what's the first thing you probably want to do? Close out the position. Where do you think the first target's going to be? Back to the T-line. If you stayed long, now you've got another set of criteria. What should it have done today to keep you long? It needed to open positive and trade positive. The fact that they opened it lower and started trading down to get out, because that's what this force right here But that little signal was telling us that the sellers had taken control. There's that trend kicker. Trend kicker is very important to understand. Uptrend, they close it here, or open here, close here. The next day they gap it up and go the opposite direction. This is all happening during the trend. That tells you there's going to be more upside. A flutter kicker, let's see if I've, a flutter kicker is when they open positive or open and trade positive. The next day they gap it down below the previous day's open. But notice how indecisive this day is. Kind of a doji day. So what's our simple rule of the doji? They're going to move it in the direction of how they open it after a doji. So if they open this lower and start taking it down, which direction is this trend going to go? It's going to go down. How far? We don't know. But the fact that we know that they opened below this level and did a doji, and then they opened after a doji lower, that told us we could be shorting because we've got a flutter kicker signal. Why is it a flutter kicker signal? If you took this little flutter out of here, you basically have a bearish kicker signal. And again, the kicker signal is your strongest signal. So if you were looking at something like this, where you had a bearish day and then a doji day that gapped up well above the previous day's open, makes this very simple. If this opens positive, which way is it going to go? It's going to go positive. So if you took out this little flutter, you'd basically have a very strong kicker signal. G-Pro, there's your doji sandwich. Doji right smack dab, a doji hammer right on the 50, and they open up positive. Doji sandwich, what did that tell us about the 50? The 50 is not going to act as resistance anymore. What's your major pattern? Your fry pan bottom. So back to that's the difference between a J-hook. Fry pan bottom is usually a big rounding pattern like this. And this usually occurs near the bottom of a trend or the lack of a trend. When I get to a J-hook pattern now. So again, here's that bullish Harami. Here's the same, the very simplistic analysis that the Japanese rice traders provide for us. Where do most people sell? They panic sell at the bottom. Last chart, I can't even remember what the last chart was. G-Pro. Yes, a little dimple right here. But when he gets back up toward this level, notice where this level was, right here at the 50. This keeps us from saying, all right, this stock's already up 5, 10, 15, 20%. I'm not going to chase after it. You can chase after the ones that are still in the pattern. All right, what did I just do? Venda. So where do most people sell? They panic sell at the bottom. What's the old rhetorical question? When do you grab for the fallen knife? Candlesticks make it very simple. A bullish Harami, what did that tell us? That more than likely the selling has stopped. When they gap it up the next day, what's that telling you? That not only has the selling stopped, but they're coming back with great vengeance. That's not it. Look what happened a while back on Netflix. Downtrend, bullish Harami, and where did it occur? Smack dab off the 50. Now, why is that relevant? Because candlestick charts are the graphic depiction of everybody buying and selling during a specific time frame. And if we can see that they're buying right on the 50-day moving average, we can see immediately what's happening, that the buying is coming in right here. When they gap it up the next day, what did that tell us? Not only did the selling stop, but the buying is coming back with a very strong force. Let's see. Same scenario in FBR. Bullish Harami, gap up. So what's all the pieces of evidence that we can put into this analysis? First of all, the bullish Harami tells us it's selling to stop. Secondly, it told us to stop right smack dab on the 50. Third, the stochastics were in the oversold area. Fourth, the next day they gapped it up, telling us that not only did the selling stop, but they're coming back in with a lot of force, which 5 told us they were closing above the T-line, 6 closing above this level. That put us in a very high probability situation. Yeah, kind of a scoop pattern on this one. So recognizing what patterns setting up. For example, let's see if I can do this. A kind of a trend formation. I'm sorry, trend formation. A wedge formation setting up. So not buying it yet. I don't have to buy it up here somewhere, knowing that it broke out through the top of the wedge. ZYNE, kind of the same scenario. That kind of this wedge pattern, waiting to see which way it breaks. Now, why are we waiting to see which way it breaks? We've got 2 months here of consolidation. When it breaks this way or this way, that means a lot of people that hadn't made up their minds in here are making up their minds. Usually that price is going to move fairly good. And the green line is the 3 T line, the 3 exponential moving average. It becomes more relevant when you start moving away from the T line. The dimple is usually the halfway point. If you see a dimple and then you don't see it move very much, then the dimple is usually a, which one had the big dimple? I forget. Is it T-Pro? Yeah, kind of a dimple in here. It's usually from here to here will be equivalent than from here to here. So you start watching out in this area for the breakout. So the dimple is usually a halfway point. MHO, I'm showing this one because there was a lot of conversation today about GBT. So we can see this was kind of a slow curve breakout into a new wave. GBT was kind of that same scenario where we broke out through this level. What's that tell us? That more than likely we're back up in this 45 degree. So remember, if you're in an uptrend and they gap it up, that's usually the exhaustion. This one wasn't what I would consider a very strong uptrend. It was more kind of in a consolidation stage in here and then broke out. That told me they were just breaking out into new territory, which meant there would be more upside. BlackBerry, this is a Morningstar signal. A Morningstar signal can be a big down day, a day of indecision, or 2 days of indecision, and a big up day. I would be a buyer of this one on positive trading with the prospects that wave 1, wave 2, going into wave 3. ICPT, remember the scoop pattern? This is what I was looking for. Notice your flat handle. Notice how you've pulled back, and now you've got the scoop. So and the scoop is based upon doji, bullish confirmation. If it opens positive, first of all, we're just going to see what it does here. If it breaks out through there, you've got the scoop pattern slingshot effect. So this one you definitely have on your watch list for a breakout. This is, again, is observe the obvious. Where did your Morningstar signal occur? Right smack dab here on moving averages. If it opens positive tomorrow, what's it telling you? 1, you're confirming the Morningstar signal that's bouncing off the moving averages with stochastics coming up. 2, it's confirming that the T-line is not acting as resistance anymore. And 3, it's telling us that this area right here, this downtrend is not acting as resistance, you're probably going to be in, let me make this smaller, wave 1, wave 2, and very obviously this is where wave 3 is starting. What was that? All right. A few weeks ago, we had a session on breakout probabilities. Notice what happened on this big breakout in team. The next day, they opened it lower. The probabilities say you close it out and you get ready to buy it back if it comes back up through this level. Now notice where it's moved to over the last 5-6 trading days. Right smack dab back to the T-line with a bullish engulfing signal. That now becomes a pattern to buy because this breakout told you there's a big change of investor sentiment. There's consolidation. Now you can start buying based upon this buy signal with the anticipation that the next target should be here, and if it goes through there, you've got a good strong rally. Would you call IGT a Credo or a Morningstar? A Morningstar. A Credo pattern is, or a Morningstar is usually a down day with 1 or 2 indecision days. Doesn't really matter what you call it, but I usually give that a Morningstar title. If it goes to 3 days or more, then it becomes a Credo pattern. Inverted hammer? No. Right now, that's not a major anything because you're not in the oversold or over area. That's just telling me that if this one broke out today and we didn't want to see it close back below where it opened, because that would have put you back into this trading range. If you stayed long, if you have to have gone long, this one has to open and trade positive. If it opens and trades lower, you're now back into the trading range. You want to be out of it and go on to something better. Abdu, I've been trying to correct that for months, and I don't know how. That's why I keep repeating what the symbol is. And I've even called CQG, and whoever I talked to didn't know how to correct that either. So now Mattel, this is telling you something. They've taken out a lot of sellers. Notice how flat this was trading, and then they wiped out a lot of sellers. You can be buying this one on positive trading because any buying now has very few sellers in the way. This is what usually creates a very strong uptrend. Let's see, the bobble pattern. You can see that in RDC, Rowan Companies. Failed, hold back, kind of did a fry or J hook. So this was back to, I forgot who asked the difference between a fry pan and a J hook. A J hook usually occurs after a strong uptrend. Now you could call this a fry pan or you could call it a J hook. It doesn't matter. You can see visually it's doing the same thing. But the fact that they came back up through the 200 after failing tells you you've got a bobble breakout. Wave 1, wave 2, look for wave 3. Now, is that relevant? The fact that we can see with much more clarity where the selling occurred and where the buying came back makes it better than just looking at just a J-hook pattern. If they use a light color, I don't know how to get to never display tabs. Always display tab, chart interview. I just don't know how to change that background. I'll try to figure it out. JKS, Genco. Same scenario. There's kind of your little bobble, pullback, back up through. Also your fry pan bottom. Look for more upside here. I don't know if I click on it. Window top of what if I do that? Did. Apparently nothing. All right. We're also going to be talking about how to set your stop losses. So this one we had a good looking chart until we had the bearish Harami. And where's our logical place to stop? Well, first of all, we know that if it opened lower, we should start coming out of it. And secondly, it shouldn't come back below the low of that doji type day. That would really confirm that the sellers are taking control. Kind of the same scenario on AEO. When it opened down here below the previous day's open, that's when we should have been stopped out or taking our profits. And furthermore, if we'd held on that day anticipating that it needed open positive and trade positive, the fact that they kept selling it off told us we should be out of it altogether. Go to full screen. If I go to full screen, then I lose the capability of making the screen smaller, bigger or smaller. Now, when you start seeing, here's one of the very full logics of candlesticks. If you see a sector, like the oil sector, providing very strong signals, that's ECA, CRC. There's another scoop type pattern that probably is going to have a slingshot effect up to the 200. PDCE, another scoop type pattern. When you start seeing a lot of stocks or a lot of charts in the same industry, the assumption is very simple. That's the sector they're buying. So if we can be buying the sector that has good charts to it, and there's lots of good charts to it. Last week we recommended BASS because of the morning star signal, bullish confirmation. That if you just think of things logically, that if you're buying a market because it's going up and you're finding which sectors are acting and then you go to the stocks in that sector to find the best ones, that just puts everything in your favor. It gives you a much more probability you're in the right place at the right time. There's a fry pan bottom breakout. Anticipate more upside in CLR. So these are type of just simple logic that if you have 10 positions on, right now probably would have 3 oil stocks. Edgar, hold on to your individual stocks until I tell Jim to do the double line. I'll try to get to as many as I can. On the other side of the coin, we're looking for the best shorts. You can see the slow curve in Merck. These are the type of things that are showing us when the bearish doji sandwich, big breakdowns. This is the evaluation or the visual analysis of finding which positions are going to have the biggest price moves. A doji gap down. This is AMD. Tells you stay short until you see a buy signal. We shorted Watt. Because of the doji gap down. You just stay short until you see a buy signal. We've shorted Viacom. It's starting to roll over. It's got the prospects that if it gets hit hard, you're going to have some big downside potential. HMNY we were watching because it was right on the 50 today. And we were short this one for 2 reasons. First of all, the bigger the signal, the more compelling that there's a downtrend. Secondly, you started shorting in here or even here, the percentage move from here to here is about 60%. Now what we're watching is we kind of gapped down and we were trading right here at the 50, but the 50 didn't hold today. So where does that make our next possible target? All the way down to the 200. We'll do HLI. HLI, right now, we're not doing anything with it because of this day. If it had opened lower, we would have shorted it, but it's traded positive. You can still get ready to short this one because of the one day island reversal. The mining stocks, that's a bearish kicker signal, and CENX, telling you if this opens weaker tomorrow, you can be shorting it. GOL, I said that right. Another kicker type signal. Makes this very simple. You can see how you got kind of a rounding top here with a bearish kicker signal. If this comes back down through today's low, which is a 50-day moving average, got plenty of room to drop from here. So why would we be recommending shorts in this market condition? Because the market condition is not telling us it's got great strength to the upside. So it's prudent to be both long and short in this market because it doesn't have any consensus. This one's EGRX, bearish engulfing right at the 50. Where's the next logical target? The bottom of the trend channel. An RRD, slow rollover. Notice the type of signal we have, an evening star signal. This one, big dumpling top, could have some big downside. And got a few people in the options room short Chipotle. Why? Doji gap down, no buy signals yet. So anyways, all this is basically common sense, knowing what usually happens after specific price moves. Bearish best friends, going to have more downside. Evening star signals, right smack dab at a resistance level, is going to have downside. So just makes it logical that you're looking at the right things at the right time. So with that, are there any general questions? Oh, somebody was asking. Yeah, I can put it back in. This is the link for the members discount for the training next week. And again, for those of you that are fairly new to the Candlestick Forum, if you're going to take only one training during the year, this is the training. This is the, once you go through this training, everything you see on an evening like this, you make, you're not in the learning process anymore. You're in the confirmation or the reinforcement process. Do you make your shorts as option puts or direct shorts? It's up to each individual, Charles. If I'm trading a $500,000 account with $50,000 per position, I'm probably shorting the stock. If I'm trading a $20,000 account which has stock and options in it, I might buy the puts or a put spread. So that's up to each individual of what they want to be trading. It's the underlying, remember, an option is just a method for buying or selling a position. So if you're an option trader, your observation or your analysis still is on the underlying trading entity. No, I usually, if I'm sitting, I don't use limit orders. I use limit orders if there's something that looks like it's got the potential of breaking out. So let's say I want to buy this on a breakout. I might put my buy stop right here. That way I don't have to watch it all day long. Will there be a different login for the session this weekend? Yes. And Abe will send those out to everybody that's signed up near the end of the week. let's see, was there another one that I was looking at? So, what do we, if earnings date is arriving on stocks we are holding? Bob, usually what I do is I will watch to see what the stock price is doing going into the close. If it's iffy, that means the bulls and the bears, the people that know what's going on, don't know what's going on. So I close it out because there's no advantage. If they're trading very positive going into the close, that usually means the people that know what's going on and have been following the stock know what the earnings are probably going to be. If they're buying going into the close, that means I'll hang on to my long positions. Now, that doesn't happen all the time, but because of the probabilities of candlesticks, it probably happens 4 out of 5 times that the price movement going into the close when earnings are going to be announced that afternoon are going to kind of confirm, the price is confirming what the expectations are of those earnings. Now, that doesn't always happen, as we saw last week, where there was indecision right here on Amazon, and they opened it up here. So there wouldn't have been any way to anticipate that. Never trade pre-market. You might be trading Apple, and it trades 75 or 7.5 million shares a day. Well, pre-market, it might only be trading 2,000 or 3,000 shares, so it's not giving you the true price. Now, if something happens and the stock is trading up huge after hours, probably won't get a big volume position executed, but I might go ahead and close it out knowing that the small volume might be whipsawing around and grab something. But I would probably say less than 0.5% of all my trades are done after hours. I use market orders, unless it's something where I'm sitting here watching. If I'm doing an option trade and the bid and ask is apart, I'll put a limit order in between. On MasterCard, I would say that they're a little bit nervous about that. If they're announcing after hours or pre-market, yeah, I probably would have closed it out with them selling it off going into the earnings. Do you set stop market orders for the next day if you are unable to be at your computer? Yes. If your schedule says, all right, I can't get to I can't get to the market because I'm gone or I'm driving to work, or I'm thinking, all right, if I want to buy whiting oil and it closed today at 5.89, I want to buy it. If it's trading above 6, I'll put it in the morning before I leave for work. In this case, I guess I'll put a buy stop at 6. Now a little bit of risk that they take it up through 6 and pull it back. Yeah, there's nothing you can do about that, whether you were sitting here watching it or not watching it. Is going to put out earnings tomorrow night. NFX. I'd have to see how they close it. Yeah, I'd have to see how they close it tomorrow afternoon if they're going to be announcing earnings earnings tomorrow night. Yeah, I want to see how they close going into the end of trading tomorrow. Bob or Rob, yes. Except no. I guess we've got green candles in an uptrend that means the buying is there. Now, the logical place would be putting your stop at the bottom of those green candles. But on a bearish, if this was I can't tell because I'm partially colorblind. That's a green. If this was a red candle, which was your homing pigeon, if it opened positive the next day, it's still telling you that that was a harami, but more specifically a homing pigeon. The green candles still at the overbought area. Yeah, that still tells you just the buying is there. It's not a reversal signal. Okay, Jim, go ahead and do the double line. And in 4.6 seconds, do the next double line. Okay. Gotta stop the scrolling. All right. Halliburton. You can be buying this one. There's engulfing, Morningstar type signal. You can buy this one with the anticipation you're coming back up here and or the 200. Snap. You can be buying this one. Just use the T-line as your stop. TZA. Nothing wildly exciting here. Probably wouldn't be long or short. No direction. And Matador, another one with a hammer, doji, left-right combo. You can be buying this one. If I was buying this one tomorrow, I'd want to buy it above this level, telling me that they broke out through the downtrend. SPCB, another one with the best friend signal. If it opens positive, you can be buying it. Then I would probably use today's open as my stop. MBI, just stay long. You could be a buyer of this one. And Dunkin' Donuts, big breakout. Look for a 45 degree. Now, after a big price move, I guess that was about a 8% move. If it opened lower tomorrow and I was long, I'd close out the position and get ready to buy it back if it came back up through the close of today. NOV, another one that you can be buying on positive trading after your kind of your long-legged spinning top today. Bristol Myers, you probably want to stay short on this one. Now, if they open this positive tomorrow, you close out your short position because now you've got a bullish flutter kicker signal. But you can see kind of the dumpling top with a kicker signal to the downside. Stay short, except if it opens positive, you close it out. Close out the short position. STX, you can stay short. But if it opens positive tomorrow, it's telling us the 50 is acting as a support level. You cover your short positions. HRTX, nothing wildly exciting on this one. Nah, just nothing there to get excited about. ADMS, we're still long this one. We bought a little bit the other day, not enough, because you had the Morningstar signal, doji sandwich, or sticksage. Right now you stay long and use today's low as your stop. What did I just do? iRobot, stay short. The bigger the signal, notice your big bearish left-right combo, the more compelling that the sellers are taking control. Down there. And very, still no direction. So you've got this flat trading. If it shows any weakness tomorrow, I'd close it out if you're long. If you're looking to buy, you wait for it to gap one way or the other because you're still kind of in a wedge formation moving sideways. ACAD, nothing here yet. I'd be out of any short position. I just wouldn't be long. Marathon, this one you can be buying. Left-right combo, breakout. That's a good looking chart. Yeah, kind of a bobble breakout. Wow. American Tower, another bobble breakout. You can be buying this one on positive trading. MKC, get ready to short this one. Kind of broken through. If it opens lower through the 50, big, huge evening star signal. Yeah, I'd be ready to short this one on weakness. Look at bearish engulfing. ALNY, decent looking fry pan bottom scoop type pattern. You can buy this one on strength. Dollar General, stay short. You can see how it got dicey up here. Doji, 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 close below the T line. Micron, if I wouldn't be going long until it breaks out through this level. I'd rather pay $42.50 for it, knowing that it broke out to the upside. 20-year notes starting to come back up. I would anticipate they're coming back up to the 50, which means interest rates aren't going to move around very much. Intuit, that's a little bit dicey. You can stay long, but you've got a bearish Harami. If it opens lower, it's coming back to test the T-line. You want to see this open positive and trade positive to continue your fry pan bottom breakout. Now, how the heck do I get there? Adobe, just stay long, 45 degree in progress. Under Armour, nothing wildly exciting here. If you have to have been short, I would have covered the short today. I wouldn't be going long on this one, though. Just not until you see something very strong. NCR, nothing. If you're anything, you're short, but I'd use today's high as my stop. BABA, I would stay long. Yes, you can still buy this if it comes up, pshaw, up through this level. But you got your Morningstar signal gap up. That's not. AVTO, I think this was a nothing chart. Whoops, it was. Now you can be buying this one on the breakout. Stay long until you see a sell signal. EHTH, big belt hold. That told you they wiped out a lot of sellers. You could be buying this one. And you want to see it get through this level right here. ERII, stay short. I didn't, yes, stay short. I'd look for the 50-day moving average as the target. HZNP, nothing. Wouldn't be long or short on this one. No direction. ARDX, another one that I probably, if I'd been short, I would have covered the short position today, but I wouldn't be, at this point, I wouldn't be long or short. VIB, another one that if I'd been short, I would have covered the short when it came up through the high of the doji today. Right now, I'd be long or short this one. Corning, oh boy, again, this is one where you had the big breakout. When it opened lower the next day, you would have closed out the position and got ready to buy when it came back up through that level. Right now, I wouldn't be long or short this one. MDXG. Nothing very exciting here. If you're long, it has been positive. Then you just watch to see what it does once it gets to the 50. Enron Oil and Gas. You can buy this one on the breakout. Little bullish engulfing signal. BCEL, nothing. Wouldn't be long or short this one. Oh, Jamie, I have no idea. BlackBerry. Oops. Get ready to buy this. There's a Morningstar type signal. You can start buying this one on positive trading. GE, just nothing there. If you're short, you stay short. It just doesn't give you enough volatility to make a whole lot of money with GE. I've never traded it. Again, it's an institutional trading stock, so it doesn't move around very much. Celgene, if you had been short, I would have covered the short today. You can see how they weren't able to take it down any further with the hammers, and you're in the oversold area. Whatever that one is, RC, it's not coming up. CVS, stay short. As protection, don't let it trade back up above today's high. Lockheed, stay short. Same scenario though. Use today's high as your stop. Shouldn't come back up through that level. SQM, nothing. It's stuck sideways. I would have come out, which we did a while back, and just wait for it to break one way or the other. Yeah, you can short that one. Play, nothing there either. Just sideways. I'd be someplace else. ADOM, you can be looking to buy this one on positive trading, especially if it came up through today's open. Got your scoop pattern setting up. An Eagle, nothing. There's no direction to it. I'd be someplace else. This one you can get ready to buy. Just watch to see what it does once it gets to the 50. NVIDIA, you can be buying this one. Kind of a little scoop pattern breakout. And TMHC. There's your dimple in this right pan bottom. Stay long. Look for the next to be starting. Oh, I don't know. I don't think solar has any time frame during the year where it gets strong or weak. I think it's more based upon how much money it's getting from the government. PLSE, another one that if it opens flat tomorrow, I'd close it out. It's lost its trajectory. I'd be more apt to buy it if it came back up through the recent highs. And that's a good bullish flutter kicker. Bearish candle, gap up doji, open positive, should have more upside. I'd be a buyer of this one. Yeah, not in the northern hemisphere. CCRC, nothing yet. I'd be a buyer though if it came up through today's high. GIMO, stay long. The best friend signal. I'd be a buyer of this one up in this area, just above the highs, because of the best friend signal coming off these dojis. And MRNS needs to open positive and trade positive tomorrow. And CTSH, All you can do on this one is stay long as it stays above the tee line. Okay, everybody, nothing tomorrow night because of the trick-or-treaters. I do remember my trick-or-treating nights in Houston, which was never very, never had very cool weather. So I can remember one night, I think it was Halloween night. I think it must have been a Monday night. I had the front door open with a bowl of candy there. Didn't have too many kids show up, but had the front door open and was watching the Steelers game when a possum went through the front door. Good-sized possum. The only problem was it went out the front door. So it'd been in the house for a while. I can remember one night sitting there watching TV and I heard something crash. Sounded like one of the power units on the telephone poles had blown. And I thought, or that was one of my plastic trash cans. So sure enough, I went in to the office and one of the trash cans was on its side and there was a great big tail sticking out. So I had to put that, had to take that whole trash can and dump them out on the front yard. And there was another night I was sitting there just watching TV. The front door was open. And this little possum, no bigger than 6 inches long, and came around the front door right in front of the TV. And I sat there and I said, "What do you think you're doing in here?" And he looked at me so incredulously that I was disturbing his evening. And it took me 5 minutes to get him corralled and out the front door, which was not so bad. About 10 minutes later, his bigger brother came in. I had to chase him out. About another 10 minutes later, Mom came in, and she got stuck behind the front door, and it took me 30 minutes to get her out of the house. Yeah, I didn't have the cats back then. Yep. Yeah, I don't have to worry about it so much now. The cat brings in all the animals. I have to just scoop them up and throw them out. Okay, everybody. We will see everybody bright and early tomorrow morning. We'll see you then.